Good evening once again. Revise chapter number 2, Theory Base of Accounting now. Switch on the video. Only Pranav have switched it on. All others, please keep your video on. Anish, Rahul, Saivja, try to keep it on. Krishna. What is GAAP? Business entity concept, money measurement concept, going concern concept, accounting period concept, cost concept. Generally accepted principle. Then the next page, next topic, business entity concept, going concern concept, accounting period concept, then cost concept. Ready? Okay, the first question. What is GAAP? G-A-A-P. Expand. GAAP. Akshay, GAAP. And also tell me what is GAAP.
GAAP is called generally accepted accounting principles.
Okay. So what is it?
It's used to compare information of different entities or companies. The accounting information must be comparable and also
Okay, good. I'll explain again. Listen. What is GAAP? Generally accepted accounting principle. Okay, you can underline this. Generally accepted accounting. Just a second. Let me share the screen from this. Share screen. That's not possible. Okay. In the second paragraph, you can find the sentence. Generally accepted accounting principles, GAAP, refers to the rules or guidelines adopted for recording and reporting of business transactions. Okay, that is the point. It is actually certain rules. Okay, what are GAAP? Generally accepted accounting principles. They are actually some rules or regulations or guidelines. Okay, adopted for what? For recording and reporting business transactions in order to bring uniformity in the preparation and presentation of financial statement. Did you get that? Did you find the sentence? Second paragraph towards the middle. Thus, Generally accepted accounting principle refers to the rules or regulations adopted for recording and reporting business transactions in order to bring uniformity in the preparation and presentation of financial statement. Then come to the third paragraph. These principles are also referred as concepts and conventions. The term concept refers to the necessary assumptions. So what are these concepts? They are actually some assumptions and ideas which are fundamental to accounting principle. And what are convention? So customs or traditions followed as a guide to the preparation of accounting statement.
Ma'am, we can write this in our own words, right?
Yes, but same, it should come in the same meaning. They are rules, and this itself is the simplest sentence. I have given you the simplest sentence to learn. It is easy, no? GAAP refers to rules and regulations. Rules, regulations, or guidelines for what? To prepare, to record, and to report financial statements in our financial transactions in order to bring uniformity in the preparation and presentation of financial statement. And also mention about the concept and convention. These principles will include concepts and conventions. Okay, so underline that 3-4 sentences. That is GAAP. Okay, switch on the videos, please. Coming to the next part. This includes the basic accounting concepts and conventions. Let us see the basic accounting concepts. Business entity concept. Read. Business entity concept. So if you are asked, what is business entity concept? You can write the first 2 sentences. The concept of business entity assumes that business has a distinct and separate entity from its owners. It is separate. It means that for the purpose of accounting, the business and its owners are to be treated as 2 separate entities. And the next paragraph, first sentence. The accounting records are made in the books of account from the point of view of business unit and not that of the owner. Enough, 3 sentences. Okay, business entity concept. Money measurement concept, easy one. First sentence, the concept of money measurement states that only those transactions and happenings in an organization which can be expressed in terms of money are to be recorded in the books of accounts. Then, next paragraph, first sentence. Important aspect of concept of money measurement is that records of the transactions are to be kept Not in physical units, but in the monetary unit. Enough. Money measurement concept. Okay. Please switch on the videos. Coming to going concern concept. What is that? First sentence. The concept of going concern assumes that a business firm would continue to carry out its operations indefinitely. That is for a long period of time and would not be liquidated in the foreseeable future. Foreseeable future, you can change it to in the near future. In future, no problem. You can adjust your words. An asset may be defined as bundle of services. Underline. Okay, that's all. Going concern concept. So going concern means it will continue for a long period of time. We are not starting a business to end it in the near future. We expect that it will continue for a long period of time. That is going concern concept. Accounting period concept. Accounting period concept. What is that? It refers to the first sentence, span of time. The span of time at the end of which financial statements of an enterprise are prepared to know whether it has earned profit or incurred loss during that period and what exactly is the position of its assets and liabilities at the end of that period. So, the period based on which the financial statements are prepared. It is prepared at the end of the accounting period. The span of time. And why is it prepared? To know whether the business has incurred profits or loss. Is the business making profit or loss? Also, to understand the position of asset and liability. Okay? And normally, what is the accounting period? It is 1 year, 12 months. Accounting period concept. The next one. What is the next one? Cost concept. Read cost concept. Let me take the page. Tomorrow morning is the exam. Don't forget. Cost concept. The cost concept requires that all assets are recorded in the books of accounts at their purchase price. So always The assets are recorded at its purchase price or cost price. And this purchase price, it includes cost of acquisition, transportation, installation, and making the asset ready to use. The first sentence. So it is not only that showroom price, the price given in the price tag, it is not that. It also includes cost of acquisition, transportation, the transportation charge incurred for making it reach the business, installation, making the asset ready to use, all kind of setting it up. That is all included in this cost price. Then, first sentence in the next paragraph, underline. The concept of cost is historical in nature as it is something which has been paid on the date of acquisition. It is historical in nature. That means it remains the same. It's like history. It is not going to change. The purchase price, once it is purchased, it remains the same. Dual aspect concept. You will read and explain it to me. I will ask. Dual aspect concept. Read. Dual aspect concept. It is a foundation or basic principle of accounting. It is the basis for recording transactions into the books of accounts. This concept states that every transaction has a dual or twofold effect and should therefore be recorded at two places. That is the important line. In other words, at least two accounts will be involved in recording a transaction. Then it is also known as duality principle. Underline. Duality principle. It is commonly expressed as asset is equal to liability plus capital. Then the next paragraph also. Assets of a business are always equal to the claims of owners and outsiders. Now, moving to the next one, revenue recognition concept. Revenue recognition concept or realization concept. First sentence, concept of revenue recognition requires that Revenue for a business transaction should be included in the accounting records only when it is realized. Enough. Only when it is realized, only when you receive it, actually receive it, then only you will record it in the books. As per this concept, it says that only when actually money come to the business, receives the business, then only it should be recorded. Revenue recognition concept or realization concept. I'm only giving you the important lines. Read the examples and understand the concept well. Okay? Matching concept. Next one. Matching concept. It states that expenses, the third sentence, incurred in an accounting period should be matched with the revenues during that period. Then the last paragraph. The matching concept implies that all revenues earned during an accounting period, whether it is received or not, and all costs incurred, whether paid during the year or not, should be taken into account while ascertaining profit or loss for that year. Matching concept. Last paragraph. Full disclosure concept. Second paragraph or sentence. The principle of full disclosure requires that all material and relevant facts concerning financial performance of an enterprise must be fully and completely disclosed in the financial statements and their accompanying footnotes. Full disclosure concept. The next one, consistency concept. Consistency. First sentence. The accounting information provided by the financial statements would be useful in drawing conclusions regarding the working of an enterprise only when it allows comparisons over a period of time as well as with the working of other enterprise. Both inter-firm and inter-period comparison are required to be made. This can be possible only when accounting policies practices are uniform and are consistent over the period of time. Then second paragraph, last sentence. Consistency eliminates personal bias and helps in achieving results that are comparable. Enough. Consistency concept. Have you prepared the questions? Last week we said no to prepare one-word questions from this chapter and keep it ready. Yes, Rahul have prepared. Have you prepared, Pranav? Anish, Alan? You were all ready on that day? Yes, ma'am. Sure, ma'am. Forgot? Or is it ready? Anish?
Forgot, ma'am.
It's okay. After revising, we'll do it now. Conservatism concept. Fast. Conservatism, also called prudence. Important. Underline. Concept of conservatism, it is also called prudence. The second paragraph, first sentence. The concept of conservatism requires that profits should not be recorded until realized, but all losses, even those which may have a remote possibility, are to be provided for in the books of account. Conservatism concept. Then second paragraph towards the end, almost ninth sentence. This approach of providing for the losses but not recognizing the gains until realized is called conservatism approach. Got the sentence? Okay. Materiality concept. Next one, materiality concept. The concept of materiality requires that accounting should focus on material facts. That means only the important aspects should be recorded. The silly transactions may be ignored. That is what this concept says. Materiality concept. The most important matters, transactions should be recorded. Okay. Materiality concept. The next one, objectivity concept. Yes, objectivity concept. First sentence. There should be some supporting documents. If you're recording a transaction, that should be supported by vouchers, source documents. That is objectivity concept. Okay. Tell me, what are subsidiary books? Pranav, try. Oh, sorry, no, not Pranav. Rahul, try. Subsidiary books, what are they?
Subsidiary books are like
Are the
book.
They are the subdivisions of journal. Okay, subdivisions of journal. Then it includes the various subsidiary books are cash book. Continue.
Purchase book, sale book, sales return, purchase return, and
Then journal proper. Don't forget that. Journal proper. What for is cash book used? Akshay, tell me. Cash book.
Record all cash transactions.
Cash transactions. That is cash receipts as well as cash payments. Okay. Cash book has got. Then you can write if you get a question. What is cash book? Then you can write. It is a subsidiary book to record all cash transactions. The cash book, there are different types of cash book: single column, double column, triple column, petty cash book. Okay. Then now I want everybody to learn definition of accounting. Take out the definition. Definition of accounting. Go through all the problems. How to prepare journal, preparation of subsidiary books, journal, ledger, subsidiary books, accounting equation. Asset is equal to liabilities plus capital. Very important. Accounting equation. Yes, quickly learn definition of accounting. Everyone. I'll ask everybody. Yes. Definition of accounting. Anish, ready?
Yes, ma'am.
Say.
In 1941, according to American Institute of Certified Public Accountant.
Louder, please.
American Institute of Certified Public Accountant. Accounting is an art of identifying, recording, classifying, and summarizing in a significant manner in terms of money transaction events which are in part of at least financial character and interpreting the source thereof.
Okay. Yes, Pranav, start.
In 1941, AICPA had defined accounting as the art of recording, classifying, and summarizing in a significant manner in terms of money transactions and events which are in part at least of interpreting the results thereof.
Which are in part at least
of financial character and interpreting the results thereof.
Okay. Alan, Alan, Shibu,
Yes, ma'am.
say.
In 1941, according to the American Institute of Certified Public Accountants.
Wait. Is your camera on?
No, ma'am.
Please keep it on.
Ma'am, network is slow.
Okay. Say.
In 1941, according to American Institute of Certified Public Accountants, had defined accounting as art of recording, classifying, and summarizing in a significant manner and in terms of money, transaction, event, which are in part of at least financial character and interpreting results thereof.
Okay, good. Akshay? They ask you, Akshay? No.
No, ma'am.
Okay.
In 1941, AICPI has referred upon the art of recording, classifying, and summarizing in a significant manner in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof.
Very good, very good. Yes, Rahul, start.
In 1941, the American Institute of Certified Public Accountants has defined accounting as the art of recording, classifying, and summarizing in a significant manner in terms of money, transaction, and events which are in part of at least of financial character and interpreting the results there.
Okay, good. Krishna.
In 1941, the American Institute of Certified Public Accountants had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof.
Okay, the results thereof. Very good, very good. Yes, Rose.
Ma'am, I learned the last definition.
Last definition? Okay. Say.
Accounting can be defined as the process of identifying, measuring, recording, and communicating the required information relating to an economic event of an organization to the interested users of an information.
Okay. Good. Now, go through the basic terms of accounting. Basic terms of accounting. Who's a debtor? Who is a debtor? Anyone?
Who owes money from the business?
Once again.
Who owes money from the business?
Read the textbook.
Ma'am, who owes money to the business?
A person who owes money to the business. Okay. Now, who are creditors? The persons or the entity or organization to whom the business owes money. Okay, to whom the business owes money, they are creditors. Creditors are liability of the business. And debtors, they are considered as assets of the business. Because money will come from that person to the business. Clear? debtors and creditors. So who's a creditor, Anish? Who's a creditor? Creditor.
Who have to be paid by the business.
Paid by the business. Okay. Okay. Then any doubts you want to ask me? Any area, any doubt?
I would doubt.
Yes.
It says like for definition of asset, what should we actually give it?
Sorry?
Like in one page it says assets are the economic resources of an enterprise, and it's in another page it said it can be defined as a bundle of service. So
First one, go for the first one. Economic events. The second sentence, you can expect it as a fill in the blanks or something. But when it is asked what is an asset, you go for the first one. They are economic events. Economic resources. Economic resources of an enterprise expressed in monetary terms. Okay? That is actually the meaning of assets. Anything else? Any other doubts? What are drawings? What are drawings? Yes.
Money withdrawn by the owner.
Money withdrawn from the organization for what? For personal use. Personal use. That is the point. Okay. Drawings means it may be money or it can also be goods. Money or goods. Okay. Money or goods taken from the business by the owner. The owner takes it. For what? For his personal use. That they are drawings. Drawings. If something is withdrawn from the business by the owner for his personal use. Anything else? Any doubts? So when you do the journal, prepare the journal, don't forget to give the narration. Okay, narration, provide the date column, particulars, LF, ledger folio, LF, amount, debit amount, credit amount. Then after each transaction, the journal entry, draw a line. Don't forget to draw a line. After writing the narration, draw the line. Then the debit side, when you have a ledger account to prepare, if you have a ledger account to prepare, don't get confused with the debit side and credit side. Account, where is debit, where is credit? Okay, then if you have any doubts, please ask.